Today, we're going to be taking a look at a portfolio that I've been working on building for the last 1,000 days. And that is my $10 daily investment into VTI. Way back in September of 2022, I joined a 10-week challenge over on Keenan Grace's Discord, KGU. I made a commitment to invest $10 daily into VTI. I chose VTI because at that time, I felt that I was too heavily weighted into individual stocks. And I'm going to tell you what VTI is if you don't know already. But with the commitment that I made to be a part of that 10-week challenge that I've kept going until now, all the way into 2025, I've been investing through market highs, crashes, inflation, hype stocks, uncertainty of all different kinds. I stayed consistent, and today I'm going to share my results. The detail on how much I've earned and why I will be continuing to hold on to this investment through 2025 and beyond. So, I am Lisa J. Stocks. Before we get any further, remember to like, subscribe, and hit that notification bell and set it to all so you can keep up with all of my videos and live streams. Drop a V in the chat if you invest into VTI or an emoji if you're just thinking, watching, and learning. So let's get back to why I chose VTI. When I first got started investing outside of my 401k, building my own portfolios, I was picking all individual stocks. At one point, my portfolio was over 50% Apple stock. But as I discovered ETFs and the built in simplicity, diversification, and all the benefits of having them in your portfolio, I decided to incorporate VTI and other ETFs into my portfolio. A way for me to gain long term growth without the stress of having to choose individual stocks all of the time. So, there are many low cost ETFs that Vanguard offers. Another popular one is VOO, which is the Vanguard S&P 500 ETF, which, like it says in the name, gives you exposure to the S&P 500, those 500 largest companies in the US. While VOO tracks just that S&P 500, VTI covers the entire US market. That means you don't just get large caps, but also thousands of mid and small cap stocks, about 3,600 all in this one ETF. Think about it. You're going to get exposure to Apple and Microsoft, Nvidia, Amazon, but also those small up and coming businesses that could be the giants of tomorrow. So I've been consistently dollar cost averaging into VTI. Some weeks I bought during the dips, other times it was thriving up at $300, but I kept going. I wasn't focused on timing the market, I was focused on time in the market, building up this portfolio. And when it comes to VTI, big money has been doing the same. VTI has seen $2 billion in inflows. What does this mean for investors like you and me? What's happening is Vanguard's total stock market ETF, VTI, has gained 6.7 million new units. That's a 0.4% increase in just a week. So, why does this matter? When ETFs like VTI see big inflows, this means that investors are confident funneling money into this ETF. These purchases push demand for the underlying stocks that are held within this fund. So currently, VTI is trading for about $295. Over the last 52 weeks, it's been in the range between about 236 to 303. We're currently back up at that high end. So let me know in the comments, what are your thoughts on this inflow into this fund? Do you think that that is a sign of confidence? Before we get on to my current results, let's take a look at the price targets when it comes to VTI. It currently has a high of $394 and an average of $329. And as I said, we're trading at about $295 as of the time that I'm recording. So we're anticipating solid growth when it comes to this ETF, and it also does pay a small dividend. The dividend yield is 1.27%, and I always have on the DRIP, the dividend reinvestment plan, in order to reinvest, put that right back into building out my position. So I invest Monday through Friday, $10 a day. I make up for holidays. And here's a look at this portfolio. I have 30.02 shares. I'm up 24.58%. I've gained $1,749.39. I've invested $7,116. My current portfolio value is 8,865. And my average price is $237.01. My last dividend payment that I received in March was $27.52, which I reinvested. So right now we're still dealing with inflation, uncertainty with different changes that are coming from the new administration in the White House. But for me, investing into VTI is not a concern. During these uncertain times, having an investment like VTI in my portfolio is exactly what I needed: diversification, a proven track record, the whole US economy, something that I know in time always recover, a steady, consistent quarterly dividend, another plus for me, a low expense ratio of 0.03%. So that's basically free to have this fund that gives you exposure to so many different companies without you having to pick those individual stocks. It also rebalances automatically. And as we touched on earlier, big and small investors believe in it. With that $2 billion inflow that has gone into this fund recently. So, what have I learned? You don't need to chase hype in order to win and gain when it comes to investing. You don't need to know how to pick the perfect stock. A simple, boring, sleep well at night investment in your portfolio is okay to have. You just need to be consistent and hold on to a solid ETF like this. Patience is key. And with every dividend payment, even though it is small, it adds up and contributes to the compound growth of your portfolio. When it comes to investing, you don't have to overthink it. You can invest into a simple fund like this and just keep building and holding long term. Being invested into a fund like this, I don't have to worry every time there's a market dip. I'm betting on all of America, not one individual company. If you're interested in getting started investing into VTI, here's how. Open a new account or evaluate your existing accounts to see if this is a fund that you could add to your current 401k, for example. You can open a new account at Vanguard, Fidelity, Webull, or Moomoo. Figure out what is the best fit for you. Are you looking to have an IRA or a taxable account with more flexibility, or even an account for your children? Like a UTMA, you don't have to buy a full share. You can start off with fractional shares, just like I'm doing here, $10 at a time. And you don't have to do that manually. You can set up auto buys, automate your deposits as well as your investments. Turn on the drip, reinvest those dividends automatically in order to build out your position. So leave me a comment if you need more detail on anything that I shared in this video. Going about building up my share sizes, my portfolios in this way. Oops, not talking to you, Siri. So, going about building up my portfolios in this way is something I've done many times. But back in 2022, when I started this particular challenge, it was new to me. But now it is the norm whenever I want to put focus into a new position. I start off like this, I set my alerts. I will buy full shares on the dip, but by taking stretches of time in order to do my daily investing in this way, it has helped me to build up my positions little by little. I've established habits that will feed me in the future. So if you enjoyed this video, give it a thumbs up, subscribe to the channel, and come back so you can continue on this journey with me to invest and stay out of debt. Thanks for watching. Okay, bye.